If you've looked at the stock market so far in 2022, things are down pretty bad. As a result, we have some things that we can do to try to benefit from them. Often you want to hear about, my stock is up 1,000%. What are ways that we can lower our tax implications? But when stocks are down, which is only on average 2 out of 10 years, there are ways that you can benefit from that. Today we're going to be talking about tax loss harvesting and the ways that rich people have been able to manipulate the way that their investment portfolio is set up for their benefit, and I'm going to try to explain how we can use it as a normal person to benefit us when we get to tax season. It is not financial advice, but this is something that you can find more information out on the internet. I just wanted to make this more available to people because I feel like a lot of people don't know how to tax harvest correctly. Everyone has heard the phrase death and taxes. These are two things that no one wants to talk about, no one's excited about, but always comes and gets them. Taxes are something that we always have to do. It sucks, and one of the ways that we can benefit from it is trying to lower our tax bill every year. One of the ways that we can do that is by selling stocks at a loss. This doesn't mean that you go in, you're trying to lose money on a stock. These are stocks that you're owning for the long term, but just happen to be down at that moment. You see this a lot. The past 4 or 5 years, we've had some major sell-offs towards the end of the year that if you go and look at the reasons why, it's because a lot of these large brokers are selling off stocks at a loss to tax loss harvest. So we get to the point now where stocks are in a bear market, we're getting towards the end of the year, and I want to talk about some ways that you may want to look at your portfolio to try to benefit from that. So when you sell a stock for a gain, it falls into 2 categories. You have the short-term capital gains, which is taxed as ordinary income, which can be anywhere from 10 to 37%, or it's something that is taxed as long-term capital gains. And this is something that, depending on your tax bracket, for someone like myself who is in the tax bracket under $41,675, it's taxed at 0%. So this is one of the incentives that the IRS has put in the tax code to try to get people to stay in the market as long as possible. If things were just set up normally, there wouldn't be as much of an incentive to just buy and hold. That's why these retirement accounts are set up in such a way where there's a penalty associated with taking the money out early. So you have the benefits of holding onto stocks longer before you sell them. So that's how you benefit from selling at a profit. But what happens when you sell at a loss? Some people may not want to look at that. It's not as sexy as saying, oh, I'm up $1,000 on this stock. Yeah, I guess I'll sell it and pay taxes on it. Losses are also applicable to taxes. They can be used to offset capital gains in this year or any other year going forward. So say I was given, 500 shares of Apple from a grandparent when I was 1 year old. We get to the point where that's going to be worth a lot of money, and as a result, it's going to have a lot of tax implications going associated with it. Let's say I also made a huge mistake. Let's say I YOLO'd on a stock and lost a lot of money. If it was the same amount of money, I would not have to pay any amount of taxes because the losses accrued on, this YOLO offset the amount of gains that you're going to be taking from these Apple shares. So losses are a way to offset capital gains. But if you don't want to offset capital gains, say you're someone like myself who is going to be in the 0% category, you can use it to offset up to $3,000 of ordinary income in any given year. And this can go on indefinitely. So say I have $30,000 worth of losses. For the next 10 years, I can write off $3,000 worth of income going forward. So there are huge tax implications. Even if you don't want to use it this year, it's not a use it or lose it. It goes on for pretty much indefinitely. So we're going to talk about selling stocks at a loss. We often talk on this channel about buying and holding as one of my favorite ways to grow wealth because we're not trying to time the market. We're just trying to stay in the market as long as possible. With a bear market like this, a lot of things are down between 20 and 40%. These are stocks that, they'll probably recover, but in the short term, we're going to be okay with selling them. So let's say hypothetically we have a stock that is at a 20% loss right now. One of the ways that we'll harvest that is we'll sell the stock and buy something that is, in the mind of the IRS, not the exact same type of product. So the way the tax code puts it is substantially identical security. So what this would mean is, say you are invested in an S&P 500 ETF. If you sold that and bought a different one, maybe from a different provider, like a Fidelity one, that would not count and these rules would not apply to you. And as a result, you'd have a wash sale, which is something we're going to want to avoid at all costs. And I'll talk about that a little later. So let's say I have, in my situation, I tried to time the market. This is something that I would not recommend doing, but I was trying to see if I could time the bottom and benefit from it greatly by buying a triple leveraged ETF. So this means that if the S&P 500 went up 1%, the stock would go up 3%. I got it wrong, and it was pretty obvious pretty early on that things were not going to be going well for this position. With leverage ETFs, they are not meant to be held for the long term because of decay. So I decided that, you know what, I'll just take the loss on this and use it as a tax loss opportunity. So I sold it at a loss, and instead of going directly back into that same stock, that would not work because of the wash sale rule. I decided to buy into specific stocks that I was already holding in my account, something like an Apple, Microsoft, PepsiCo. It still means that my money is staying in the stock market. It's just not going back into an identical security in the minds of the IRS. So I sold these at a loss, and now I'm going to be able to write off these losses to counteract the dividends that I've gotten on my dividend portfolio, and I can use it to offset any additional income, just ordinary income on my tax return. So this was a stock that I didn't try to lose money on. I just was on the wrong side of the market, decided to sell at a loss, and because of that, I'm going to benefit from it. One of the things to keep in mind is the wash sale. I mentioned the idea of a substantially identical security. Another way to have the wash sale rule apply is if you buy back into that same stock or an identical security within 30 days. So I sold out of this position. I have to wait at least 30 days before buying back in, or else it's going to ruin this situation with the wash sale. I've made plenty of videos talking about the wash sale, and people always say, oh, it just changes your cost basis. You have to buy back in and then sell it, and then it'll work. But if you're getting towards the end of the year, the tax implications only work on trades made before December 31st. So if you're getting towards the end of the year, you make a mistake, you have to wait an additional 30 days before buying and then selling. That might not work for this tax year, and you will have those tax benefits going to the year after. So it's just important to know what you can and can't do, and I would highly recommend doing more research before you try using this scenario. This is just something where stocks are at lows right now, and if you have a way to benefit from them, tax loss harvesting is a way that I've personally used to try to benefit me for tax season next year. So let me know in the comments down below if you've ever tried tax loss harvesting and if it's been beneficial for you. And let me know if you've ever had problems with the wash sale. You always see stuff on Wall Street Bets about people day trading too much, and as a result, it makes their taxes way more complicated. There are ways to get around the wash sale if you have more time, but if you're doing it at the end of the year, you do have the potential of having a huge tax bill that won't be fixed until the following year. So let me know what you thought about this video, and let me know what topics you'd like me to talk about in future videos. Thanks for watching. If you made it this far, I really appreciate it for that like and subscribe button, and I will see you in the next video. Thanks for watching.